We're going to take a little walk around Wall Street. Here is the Philadelphia Sox Index. And you always need these to lead rallies. You can see that the net changes on the day, or the change from the open, it doesn't matter, but you have a slew of green. That's always a mandatory in these rallies. This time of year, semis do okay. We have a daily chart on the semiconductors. You can clearly see on the semis that they have been in a very narrow range, and the 200-day moving average is up here, but they're acting well and they performed on this daily chart. And once again, it's the Philadelphia Sox Index. It's right here, and it's always an important one, and it's at a major resistance level. Here we have the DJT, Dow Jones Transportation. It did make a rally. One of the things that we would like to show you as we're doing our walk around Wall Street is that Dow Transport is testing that 200-day simple moving average right here, and it has to have a clean break higher. Until then, it's been in a very tight band. It rallied up off the bottom. You always got to see the transports working. Here are the names in the transports that have, you know, a little bit of buying, a little bit of bargain hunting and whatnot. The problem is price of oil is up there. 200-day moving average until I consolidate. I'm above key simple moving averages. I got to get above the 200-day moving average right here. That's that resistance level. Until then, I've got to consolidate above it, build a base on it, and move higher in the Dow Jones Transports. DJI, Dow Jones Industrials Average. That's what they are. All of them are right here. And I can show you clearly, those are the names, by the way. Now, on the daily chart in the DJI, you can see that we're coming up right up here is that resistance level. You're above the 200-day moving average, rising 10. All looks well. However, until we consolidate above these two resistance lines and hold that consolidation, we've rallied off the bottom. And they played a major role, the industrials, in every bottom rally. They have to participate, but we're at the major wall of resistance. Once again, DJI, these are the names. We're going to take a look at Dow Jones Internet Commerce. Internet Commerce has got some problems at the 100-day moving average. However, it's been in a very daily range, contracted, really. And we have yet to take out the high resistance levels. This was the bottom of that rally. Here are the names that are in there. Priceline, Google, naturally, Amazon, okay, CRM. So here's your update on, once again, Dow Jones Internet Commerce, ECM. Moving right along to the Philly gold and silver sector, we've come up here and hit this wall of resistance. Not the reversal resistance. However, this is that resistance level. And we have yet, in 1, 2, 3 days, the miners have been acting well. There was a little bit of buying across the board, not anything big, but once again, they're at the wall of resistance. And the names involved. They've rallied well off the October lows. This is that support level above the 100-day moving average here, above the 200 and above the 10. But nonetheless, you got to get above that resistance and consolidate to move higher. Once again, CBOE Technology Index, and here are the names. These are the names. Apple's in here. How about that? Motorola, Microsoft, Qualcomm, Yahoo, but these are the names here. And they did catch a rally in this particular index, and there's the buying. Now, here's the problem. That's that reversal. These are a major top right here. And the thing about it is it's testing and trying to regain the 200-day, every key daily moving average, 200-day, 10-day, 20-day, it's all right here. This is the daily consolidation since we put the highs in the markets from the October lows. Once again, you always want to see the various technology sectors being bid up, and once again, there is green. However, I will say that until I have a closing price above this trend line right here, this one here, and I can consolidate to run through there, that it's going to be harder for the broader market in the indexes to move higher without the continuation of processing here that those fund managers need to process on how to buy up this TXX. Once again, we'll move on. Here we have the CTN.X, and you can find all these charts. All you have to do is type it in a search box on stockmarketfunding.com under sectors. And one of the things, it's another technology one that we always cover, and it's very, very important. It's coming up to the 200-day moving average of that major top. And it's very, very important that it plays a key role in the NASDAQ and NASDAQ 100 and rallies. And until we can close above these tops and consolidate and hold the closing price above the 200-day simple moving average, it'll be harder for the markets to move forward. However, once again, these are the names that are in this particular technology index. We clearly see they were buying across the board, and that's what rallies need, is the technology to perform. Here we go. We have the famous NASDAQ Transportation. Now, and whether it's the Dow Jones Transportation or the TRANX NASDAQ Transportation, you can see down here what a great rallies we had and how we've taken out all these major resistance levels, and they all have to participate. We had a reversal here at a major double top, and we have lower highs. We're above these key moving averages until I'm consolidating above here. The 200-day remains way above it still. That's going to be ultimately a resistance level up there if we break through these resistances. Right now, the NASDAQ Transportations must continue to rally. Here are all the names that are involved in the transportations right here. NASDAQ Transportations like DJT, Dow Jones Transportations. You always want to see these transportation stocks performing. Here we have the Morgan Stanley Technology Index, MSH.X. All of these are on stockmarketfunding.com. Please type in the search box there on the home page, and you'll be able to find all the analysis that we have done. And why are the various technology indexes? One of the most important things there is that we've hit a top and we have a reversal here. And the thing about it is we're below the 200-day simple moving average. Until I have a close above it and get a run through resistance and consolidate these prior tops where we had reversals and these bottoms that have held, is that the problem is that this high still remains lower than that high and the original high 1, high 2. This high here must go and shoot right through there to keep this rally going. The names behind the MSH.X are all right here, comfortably here. Google's in here. So you have lots of names in this particular one. However, you got a slew of green. So once again, to keep rallies going, you have to have the various different technology indexes performing. However, the rally will end if we do not get above here, because it's going to take the technology to keep driving these markets higher. Here we have AMEX, IIX.X, Interactive Week Internet Index. Very, very important because there's some broad names in this one. And this here, we've been digesting these lows. We broke out. That's at October bottom. We know all these names well. And have been in most of them. The thing that we would like to inform you is the 200-day moving average is serving as a triple top at resistance. You must close above it, consolidate it, and make higher highs. And you need an increase in volume to keep running through there. I will show you the names here. You got Akamai, you got Amazon, Baidu's in here, Broadcom, lots of names you may know, FFIB. That's been acting real well lately. Google's in here. You got various different Priceline, Qualcomm, Red Hat. So you have a lot of stocks that are in here. And the thing about it is the leaderships like the Qualcomms and various other ones must continue to go higher. Those are the names. That is the index. This here is a major resistance. Once we clear it, then some of the leadership names will continue to move higher. We have to consolidate above it, and we have to move higher. Here we have another form of an internet index, and it's called Morgan Stanley. It's the MOX.X, Morgan Stanley Internet Index. And here are the key components that are in this name. It's a little bit shorter in value, but you have the bellwether Google. We're bullish there. We have been taking profits. You've got various different stocks. You got Amazon helping this one, and actually got Apple helping this particular one. I would say that eBay is a little bit of a help in here, but nonetheless, here's the problem. The problem is we came up to these major tops. Yes, we had these great rallies, as you can see. Yes, the rallies did exactly what they should do. However, it's very important that these names that are in here, the bellwethers, Apples and the Googles especially, not to mention the Qualcomms and the price lines, have got to keep contributing to keep moving this higher. There was a slew of buying today, as you can see. However, check it out. This big reversal down here to this major support area, we're just sitting on it. Okay, there's 100 40-day simple moving averages. The 200 remains here. 100-day is this one. There's the 20-day. And the problem is, I've got to close at least above this near-term trend line. That's going to be my resistance. But once I go through there, we want to see the shorts come out, but you have to have a lot of buying going up here and then taking out the previous high from this original rally. These are the names and the bellwethers that play the key role. Goldman Sachs Software. That's what this is. North American Technology Software. Why is the North American market very important? These are the names in this software area, as you see here on the screen. And I can tell you that this North American index is very important to rallies. These are all the names. You can see them here. And they all play a role. And it's a sector, and it's software, and it's a Goldman Sachs, and it's right here. Here is the current resistance level. Until I get a closing price above here, take out these tops, consolidate, make a series of higher highs, then the rally from this low area where we've been rallying up in this index with those names is that if those names aren't going to make higher highs, then this isn't going to take out that high up here. The bull trend continues when you consolidate above the previous double top reversals and land at support and then work your way higher. That will keep the bull rally going. Goldman Sachs Software North American Technology Index. It's on the website as G14Y. $G14Y. You just type in S&P North American Technology Software Index. Will Europe have an impact? Yes. Here we have the S&P North American Technology Internet Index, Goldman Sachs, G17Y. But here it is, S&P North American one. Now, look at the names in here. Once again, you got Amazon in this sector, and it's always nice to know, oh, you got Google helping this one. And not only that, well, we don't even talk about Netflix anymore. We've shorted that all the way down. Look, these are the names. But here's the thing. We're at a major top. We're going to have to close above this green line, the 200-day moving average. It's going to take Google in this sector right here, that name, and that Amazon one can do it. And what do they have to do? Those names continue to move higher, and the rest of them participate. This is that major little support levels. This is the tier 1, tier 2. The thing about it is that you got this high is lower than that high right here. And you've got to consolidate and take out these tops. You've got to consolidate and build a base to run higher to keep the year-end rally moving. If we fell and go down, then names in here will drag it down. That means you would look for the key names in here that give the most weighted price action support. Very, very, very important is the Midcap 400. Middle cap 400 means it's not small cap, it's not large cap, it's in the middle. And one of the things that we're looking at is that we had a great rally in there. Mid caps have got to perform like small caps. You like to see them always lead the rallies, as you know. Not only that, when you pull back here, we have to take out this high. The 200-day moving averages there. All the daily moving averages are intersecting right here, 10-day, 20-day, and 100, and that's at support level. Now, having said all of that, until you consolidate above these highs over here where the reversals were, the rally will be at jeopardy. You have to continue to make the higher highs, and most importantly is the daily lows have to be higher than the previous day's lows. This one's got support here. These are the names in the mid cap right here. and they're all 3-digit levels, but nonetheless, it's a very important gauge of the U.S. economy. You had people buying. You can see all the green, and it goes on and on and on. There's 400 stocks in here, but they all caught a little bit of a positive bid. And what does that mean? That there was buying across the board. Not huge, not on real big volume. I didn't say any of that. I just said there was some people out here nibbling, but it must continue to do one thing. It's got to break these reversals. So reversal 1, reversal 2. Now that's going to be ultimately the 200-day moving average will serve as resistance. If we fail and go down, the rally's at jeopardy in the broader markets, because if we reverse here, then the rest of the markets will follow. Here we go. CBOE, S&P, small cap 600. I can tell you reversal 1, reversal 2. Support held the original rally that the small cap always leads the way. Always does. But guess what? Reversal, reversal, until we get above that 200-day simple moving average and take out these highs and consolidate at least right here on this trend line, this secondary trend line. Here, let's take that out. You got to consolidate above this trend line, and you got to close above the green line, the 200-day simple moving average. Small caps must continue to rally, otherwise the year-end rally will be at jeopardy without getting closes above here. Another thing, SMLX, these are all the small cap stocks. Here's the laundry list of the names. But notice that the small caps had buying. Look at that. It's all green. As we go down through the small cap, that is bullish for the bull, that small cap companies continue the rally. Look at the amount of green. That's called broad-based buying. And that's an update. But it must keep going. Otherwise, this bull rally will be at jeopardy. It must continue to take out the resistances, and the leadership names in the small cap has got to break higher to keep this bull rally moving. Wow. S&P 100. How about that? Major reversal there. Reversal number 2 here to the 100-day simple moving average. And the 200 days here. This is a very important component, the S&P. It's the big multinationals and whatnot. I'm sorry, in 2012, they're going to get slammed. Why? They're not going to be getting all that money out of Europe. Europe will contract, and so will these earnings in the S&P 100, as long as with the S&P 500. Until I consolidate above the 200-day moving average, and I at least consolidate above this trend line to take out these highs, it's very important that the big 100 stocks, OEX.X, this sector must be moving higher, and there was a lot of buying in it today. So we had the buy side. That's good for the bull side. Didn't have to be a lot of money that went in it. It's just that people were in here buying. And once again, that's that year-end money getting pumped into these indexes because these fund managers have underperformed. True story. So when rallies continue to go higher in broader base markets, all the sectors, all the indexes, listen, these is a key right here, this chart. You've got the rally will be at jeopardy. It made its lows. It's done everything that we wanted it to down here at the lows. And we have all the live analysis on this for all of 2011. Just type in the search box. You got to close above the 200-day simple moving average. It's a daily chart. It's important that, unlike the small cap and mid cap and those other various indexes that initially lead rallies, but where is that big money going into these names for dividend yields and lots of various other reasons? Caterpillar's in here. It is the top S&P 100 index, and we have a lot of buying across the board, and that buying, broad-based, low-volume buying, must continue, and fund managers will have to go to work and put some of that money, and these will continue to move higher as long as you have a high volume. The shorts will have to come out of a lot of stocks. Why? because when you close above that 200-day moving average, that fuels that bull rally. But I can tell you what, if I come up here and hit resistance and start getting daily reversals, that's when stocks got, instead of green, it's a slew of red. But once again, S&P 100 index, and I'm going to conclude the daily 11/15/2011 middle month sector indices all in one video here. We have all the individual analysis videos on our website. You can go look them all up one at a time, and you'll see what our analysis was then. And you can see here now during this whole rally is that if you're going to have a Santa Claus rally, all of these indexes have got to break resistance. If they go up and test and start to roll over and have a sell side program, well then guess what? Santa Claus has already come and gone.